just like the AI, right? The applications for AI, the total CapEx spending expected, the applications for AI, all of these expectations get loftier and loftier.
And on the way up, people will say that because, you know what, you're not going to get any pushback. But it's the same thing. Valuations don't matter. It's different this time. Total addressable market. We have a moat around our business. I mean, these are all things that, again, when things are going higher, people just nod in agreement. When things start to go pear-shaped, it looks a little different. And in terms of the AI trade, I mean, again, twice last year, you saw NVIDIA with the pattern that we talked about, this engulfing pattern, and both times the stock went down anywhere from 35 to 45%. You saw the same thing last Tuesday, I believe, when it made a new all-time high, closed on the low, twice, almost 2 times normal volume. It is setting up for a very similar move.
The obvious difference is Lilly on a one-year performance is up 15%, when NVIDIA is up 140, so a lot more can be taken out of an NVIDIA. What I think you're going to see is people don't need those complicated chips the way they need, way they're looking for an NVIDIA. You can get another chip from a host of other semis. So I think what you might see is not the whole semi trade fail, just those larger cap tech names, and then go into the smaller ones in the same space.
Reversion to the mean, a reversion trade,
right,
so to speak. Julie, so let's connect it. I mean, if we are concerned about these trades, we are concerned about the valuations of these two areas, which were the hottest areas of the market. What happens to the markets overall as we sit at this crucial moment ahead of the inauguration of Donald Trump next week, as we are expecting CPI numbers tomorrow? And earnings season, by the way.
Yeah, I actually think that earnings season is going to be much more persuasive for investors than what's going on with these two. I think it's very possible that we continue to see better broadening, better improvement, better participation in other stocks. And, you know, the things that I think the parallels that we see in AI and with these GLP-1 drugs, there are kind of important differences that I would really point to. One, you know, with NVIDIA, the biggest challenge I see with that is just the level of customer concentration that they have. You know, half of their business is only in a handful of companies. That's not the case, right, with all of these healthcare companies. And so there are fewer risks tangentially around a lot of these names, and that's where I would probably focus. But I think, again, like the most important thing really is going to be earnings. We already had a report today on, you know, small business confidence that showed great improvements. And so the proof will be in the pudding if we see better CapEx, broadly speaking, outside of the Mag 7.
Yeah, on the earnings front, though, we got used to a lot of different companies in a lot of different areas of the market talk about AI in their conference calls. I think we were kind of tracking it. This quarter, just wait, constant currency. If you think about the last week of September where the U.S. dollar index, the Dixie, was trading about 100. It just touched 110. When you think of that on a sequential basis, but also year over year, that's going to make a huge hit to some of the biggest earning contributors, which are also some of the biggest companies in the market. And so to me, I think that's something you got to keep a close eye on. But obviously, any deceleration in some of the fundamentals of these big stories. But those are two things that I think are to be big headwinds for earnings growth this year.
Dollar rates and policy uncertainty.
All fair. All
right?
fair.
Yes.
Top mentions on conference calls.
No, and we're going to mention, listen, PPI today, I think, initially gave people some, I don't know, a bit of relief, maybe some, sigh of relief that maybe things were not as hot as the market suggested. But the bond market didn't back off. I mean, 10-year yields are still 4.79. If that had been the case, you would have seen a precipitous drop. Tomorrow's the number, though. And I think a lot of people think you can start to see a reacceleration. I am one of those people, and I'll continue to say it. I mean, 10-year yields, I think, are going to 5%.
Reacceleration, and therefore what happens to the markets?
Goes lower. I mean, almost by definition, it has to start. You know, when valuations matter in a higher interest rate environment.
Yeah. The only thing that the market has going for it is that PPI is seen to be a leading indicator where CPI is lagging, and the Fed looks towards PCE. So you have a host of things where it gives the Fed cover, not that the Fed needs any cover, but let's wait for the PCE to come out. Those are a little bit more variable than the two numbers that are coming out this week.
Yeah,